Hello and welcome to First Steps in Forex. Today is Sunday the 20th of March. A new market opens up tomorrow for the week, and we're looking at the euro-dollar daily chart. Now, we have seen over the last few weeks a tremendous bull market in the euro-dollar. A lot of money has moved over to the euro. A lot of that is due to the fact that the European Central Bank, have been talking about raising interest rates, so making it better returns for people investing in euros. That seems to have driven things upward. Also, the general economy around the world seems to be improving, mainly due to things like quantitative easing in the US. Market Germany is powering forward in Europe. Unemployment is starting to fall. A lot of countries have taken very radical steps. There's been a new plan to agree bailouts and support of countries in Europe that are struggling, like Greece, Ireland, etc. So everything seems to be on track, and people are moving money over there because if the interest rates are going up and they perceive the economy is going well, then maybe they can get better returns on their money. This is despite all the recent political problems. We've got all the problems in the Middle East at the moment. We had this very sad event in Japan with a tsunami and the earthquake. Tremendously bad news, of course, but nuclear, with a nuclear effect as well. With all that uncertainty in the market, normally people move to safe haven currencies, and one of those has been if you've been reading the news about it, the Japanese yen has shot up because it's seen as a very safe currency. And with all these problems, completely perhaps against people's intuition, the people have poured money into the yen because they see it as a safer currency amongst all these problems. And they've been talking about Japan bringing a lot of their money, a lot of their investment funds back to Japan to help pay for the reconstruction effort after the earthquake, tsunami and the nuclear problem. So it's a lot of news, a lot of things going on at the moment, but it seems the overriding position is that the situation in Europe seems to be stabilizing. Economies are beginning to kick back in, and if the interest rates are going up, and it makes it more attractive, especially for the institutions, etc. That's why we've been powering up. Now we go to the weekly chart. You'll see here that way back in October, November 2009, we had our double top peak, dropped down to mid-May 2010. We went up to 50% retracement. We then dropped back down again. Okay, and then we came back up again, and we're getting close. We're not too far away from coming back up to that 50%. If you look at the daily chart, you can see on Friday we absolutely powered ahead on the daily chart. Okay, so this was the 18th of March, the Friday, and on that Friday we absolutely powered ahead. Now, the last time I posted was a week ago, so we had Friday, Thursday, Wednesday, Tuesday, Monday. So this was Mondays. And I said that if we went above the Thursday's high, we should go long. So I went long on the Monday. It hit this, of course, started bouncing back. I got stopped out, made about 50 pips on Monday. Then what we've been doing all week is bouncing between this support and resistance level, this pivot area, which is around the 1.4, which is obviously a very powerful round number, bouncing back down to this one, which is another pivot area. Okay, and also not quite close to the 61.8% retracement from a long time ago, and which can be quite important as well. And we just bounced and bounced and bounced until eventually on Friday we broke through. Now, after I came out on Monday, I said to myself, alright, well, as I got stopped out, I'll wait until we broke through. So I actually went long here. Fortunately, I didn't get stopped out because I had a good quite a long stop loss. And stop loss strategies are, what I did was I had a much wider stop loss than usual, over 100 pips, but of course my lot sizes went down to make sure that I keep within my risk management of only risking 2% of my pot for every trade. And then Friday I was able to take advantage of that, and it went shooting up, and I closed off just before the market closed, and I made, well, God blimey, I think it must have been getting under 150 pips, something like that, or more in fact. 1439. It was something like 150 pips. So it was a very good day on Friday. So what do we think is going to happen next week? Well, we still have this enormous upward trend bouncing off and around this sort of semi-trend line. And we have to say, if when markets go up with such power, they're building up momentum all the time. So you would have to say that the market's going to continue to rise until something dramatic happens that'll cause it to turn. Okay, but who knows what that will be. So at the moment we're assuming, I'm out of the market because I always come out under weekends unless for extraordinary circumstances. So if we open above the high, I shall go long again, but we'll wait until the UK Europe opens. I'm not going to make a trade until they do, till we're probably at least half an hour into the opening, because you get a lot of volatility when the markets Europe and the UK opens. Europe opens first and the UK afterwards. So when that happens, wait 20 minutes, half an hour to settle down, then make your decision. But the new target area would be this 50%. We had a pretty well near double top before, so that 50% retracement, should we go back to the weekly chart? That was from there. Okay, we're approaching that area again. Let's go. Sorry, let me. I can see what's happening here because it's the end of the week. They haven't updated. Our charts haven't been updated. Let's just check that. 6th of March. That's why it's a bit confusing, because it hasn't had a chance to update yet. So I apologise for that. That's because I'm on a Sunday and my connection is not connecting to the server at the moment. Maybe they're doing some maintenance work. So back on the 5th of November 2010, let's go to the weekly chart. 5th of November, which is around this time. In fact, we go back to the daily chart and zoom out, we'll get a clearer picture. Okay, so that high there, which was around a 50% retracement rather, of this high to this low and back up again. And you remember we had this trend line here, but we burst right through it. So I don't think that trend line is obviously hasn't held at the moment, but this one is holding. So I think we've got a very good chance of carrying on to continuing to go up to this 50% retracement. Okay, now euro dollar likes 50% retracements a lot, so it'll be interesting to see what happens around that area. It's also, around the 1 point. It's not really a round number, but a 50% retracement is quite important. It's not even really. There is some. If we go back to the daily, there is some. It's obviously bounced off there in the past, and let's have a look. 50 bounced off there, of course. So there is obviously some traction for here, and here. So that area, let's draw it in now before we forget. There is a pivot area around here. You can see where it's bounced off around here. And in the past. Just extend it back and you can see around here. It's an important area. So the chances are we're going to continue going up and hitting that area. Okay? So we need to look out for that and see what happens, because it could be a move, it could be the opportunity to go short. But we're not going to go short until we've seen a clear bounce back off that, and where the close of one day is less than the close or low of the previous day before we go think about going short. Certainly on a daily chart anyway. Alright. We've got a nice round number around there as well, 14260. Well, it's not a huge round. Actually, no, it's not. Sorry, it's not a vitally important round number. Most important round numbers are the 1 point something. Well, the 1, it's obviously the most important, but if you've got a 1.40000, etc., then that's quite an important number as well, which is why we had so much fun around here. Okay, my prediction is we'll carry on going up, we'll hit here, and we'll work out what happens after that. That could all happen on Monday, depending on what's going on, or we could be bouncing back. Over this weekend, we had the action in Libya. That might cause issues on the market tomorrow, so we need to make sure and be happy with what's going on. Now, another thing that I haven't really talked about before is the price of oil versus the US dollar. They tend to be, if one's going up, the other one's going down. Now, the oil has been going up a lot recently because of the disturbances in the Middle East, and that's why if there's more chaos in oil, will continue to go up, and that should keep the dollar dropping, therefore the euro dollar going up again. However, people think that the Middle East situation is fine, and then the whole thing can turn around and come back down again. We'll see a turning point in the euro dollar, and we'll start coming back down again. That'll be a good opportunity to go short. Okay, so at the moment it looks as if we're going to carry on going long. Let's zoom in again. Let's wait to see what happens when the UK Europe opens tomorrow. If we keep going up, go long after the UK Europe, and just use this as your target area, tighten your stops around this area. If it drops, then I would want to wait until really you've gone on a daily chart, at least gone but back below this. It's very difficult to judge. In fact, let's actually, there's an opportunity there for another Fibonacci. I must have forgotten to put it in the past. Let's take that high to that low. Now that's interesting. We just bounced off for 94.1% on Friday. So we could see a reversal. It's not a well-known one, 94.1% retracement, but it does happen quite a bit. So that could be a signal for a reversal. That's why we should wait till the UK and Europe opens, or until the UK opens, and plus 20 minutes, half an hour, before you decide what to do. But it's up to you. Whatever you do, though, remember to put your stop losses on and keep your risk management so that you're only sacrificing 2% of your pot for any one trade. That's the crucial bit, because if it goes wrong, it doesn't matter. You live to fight another day. If you put a big chunk on and you lose it, you're going to lose huge numbers of pot, a huge percentage of your pot, then you're just fooling yourself. So, remember, if you lose 50% of your pot, you've got to double to get back to where you were. Okay, so successful forex trading, a lot of it is to do with keeping what you got and protecting it, let alone making money. Okay, it's all about percentages. It's all about being consistent and following a strict money management rule, like I've said before many times, but I'm going to keep repeating it. Okay, consistent approach, strict money management. That's the secret to success in forex. Okay, well, that's it for today. If you want to know more about how I trade, then go to my website, www.firststepsinforex.com, and you can download a free ebook and videos to show you how to get started, even as a complete beginner. Read the book, follow the rules, watch the videos, and practice and practice and practice. Okay, you don't have to risk any money while you're practicing. That's the beauty of it. And until you're consistently profitable on a practice account, then you can start opening a small account and build from there. Remember, forex trading is not a quick scheme. It takes time. Okay, it's like a new job. You have to pick up the skills, and that could happen in a month, or it could happen in 6 months, or even years. A lot of traders don't get consistently profitable for a year or two, even more. And most people, forex traders, never get consistently profitable because they keep taking stupid risks. Okay, if there's one thing I can hopefully pass on to you, it is follow your risk management plan and be consistent in your trading ideas and how you create your trades, and measure what you're doing and tweak, and you just treat it like a job. Okay, anyway, thank you very much. I hope you enjoyed that. Hopefully I can post again soon, certainly by next Sunday, hopefully during the week, and hopefully you've enjoyed this podcast, this videocast, and we'll speak soon. Thanks very much for watching. Thank you. Goodbye.